So, we have been talking about this issue of applied fintech for the better part of 3 hours, and I know some of you must be wondering, do we even need banks in the future? Are banks even going to exist, or are they going to become something like telegraphs or typewriters that your grandparents tell you stories about? I used to have to go to a bank. Some people agree. They don't think banks are going to be around much longer. Some people say, let's get a show of hands, actually. A pop quiz, my favorite. Who thinks in 50 years there will no longer be banks? One brave person, 2. Raise your hands high so I can see them. It's dark back there. So we've got like 10%. Everyone else really believes in the power of banks. So here to discuss that, I'm pleased to introduce our entrepreneur, Armin Eichhorn. Please take the stage and bring up your panelists.
Thank you, Sarah. And indeed, that was very interesting to ask who believes that in 50 years we'll still have banks. And just a few people raised their hands. But I suspect that everyone who didn't raise their hands would probably not agree to the statement that the banks are going to be the same as they are today. And I think that's also why you're here. You want to see what is coming, what's next. And we've brought a great panel together. So I would like to start by introducing the CEO of Finno Digital, Florian Christ. So Florian actually founded his first company at age 18. And then later on, he went into the consulting and business development at Commerzbank. And now at 38, 20 years later, he's back as an entrepreneur. And Finno Digital, as I understand, is a service that helps people switch their bank account digitally. Thanks a lot for joining us. And please take a seat. We're going to bring up the other panelists. So also with us, maybe some of the entrepreneurs in the room already heard of Fidor Bank and many other people as well. And we have here, and we're very happy about that, one of the shareholders and indeed the CEO of Fidor Bank, Mr. Matthias Kröner. And Fidor already has over 350,000 users. And that was very peculiar. In the briefing I received, it didn't say customers, it said users. I was like, wow, he's got the mindset. So I don't know if it was just a typo or if you actually mean users. Because Fidor, as you might know, is a fully digital bank. And they just pioneered, together with O2 Telefonica, I believe the first bank account that you can access directly through your cell phone contract. And you get interest not in terms of money, but in data. So that's a very interesting model, and it shows how Matthias with Fidor has been spearheading innovation in that field. Also up on stage, and I'm very happy to see her again, is from GFT Technologies, the CEO, Marika Lulay. Thank you for joining us. Marika has 25 years or over 25 years IT experience, and since 2002 she's at GFT, responsible for the key operational areas of technology and quality. So thanks a lot for joining us today. And next up, someone who comes more from the traditional banking world, you could say. So he's been working at Deutsche Bank as COO of the Global Technologies and Services branch, and then later as COO of Landesbank Baden-Württemberg, which probably the Germans among you know, and I'm just going to briefly mention to everybody else that that is the bank, that state bank in the southwestern part of Germany. He's still active as an advisor and has been in banking for many, many years, so I'm glad we have him here today. Martin Setzer, please join us on stage. Last but not least, from Credit Shelf, we have the CTO here today. And he has previously been CEO of a 2 billion public company and also a serial entrepreneur. Please welcome with me, Christoph Michael. So we have a very mixed panel indeed and a pretty full house. So I think a lot of people are interested in seeing where is this whole space going to develop. There is a lot going on both in some of the traditional players, a lot of fintech startups coming up. Actually, just yesterday in a related industry, InsurTech, we heard that a Swiss startup, FinTechs, raised $28 million. So there is a lot going on there at the moment, and we're really eager to hear where this is going to take us. But maybe we could just start out with the challenges. So Marika, why don't we start with you? And we have a microphone right here. Thanks. So what do you think are the challenges today for the traditional players in the banking and finance sector?
So the challenge they have is for sure the parallel and contradicting request to, on one hand, save cost because the margins got cut as the regulatory, let's say, limits most of the business. At the same time, invest into new models, invent technology, and actually the main challenge they have is to master that contradiction at the bank side. On the fintech side, the challenge they have is to scale up and to develop a broader model. So both parties have their challenges, and it's not the same.
Martin, how would you see it from maybe the more traditional view that you might be coming from?
Unfortunately, exactly same as Maike. We have this trio infernal, as it was recently called in the Börsenzeitung, of erosion of revenues due to the margin pressure and low interest, regulation and digitalization, but that is not just one trend. It's massively changing client behavior. It's diffusion of new technologies, which goes even faster, in contradiction to how banks usually can react on the technology side. It's fintechs, we talked about it, but it's also non-banks, other non-banks, non-fintech non-banks, tech companies, and telcos, especially in the payment and account sphere. And this confronts banks with legacy technologies and typically siloed organizations. So that is definitely a challenge.
So maybe building on that, do you think in that space, one of a good move for a bank would be to launch into cooperations with fintech, or is it more important to build internal capability like companies in some other fields are doing, who are more and more defining themselves as software companies, actually?
Both. Just to the last point, definitely banks have to change their mindset and in their mindset become more a technology company. One of the reasons why our banks are so slow in innovation is you don't find technology-savvy people usually in the management of banks, very few only. So banks don't react as fast as usually technology companies react. But to your initial question, you have to do both. Banks have to open up themselves. Technology-wise, we talk about open API, corporations with fintechs, but also corporations with competitors. We will not be able to impose, even the savings bank sector as the market leader in retail in Germany, has not the power to impose something on the market. It only goes together. And the PayDirect product, which there's certainly much to do still, but that's just a result of that recognition. We can't do it alone. We have to do it together. So collaboration is key, but you have at the same time to build internal capabilities.
You mean PayDirect, the online payment service?
Yeah, the online payment.
So I would be actually curious, who in the room from here knows PayDirect? Who of you is actually using it? I think that is very interesting. I mean, for those who haven't heard about it, PayDirect is, I believe, an initiative of many of the initial state banks in Germany, where they said, okay, we want to bring a different kind of payment method to the market.
All banks in Germany.
All banks.
Private banks, cooperative banks, and savings banks together in a shared shareholding. Yeah.
So that's a very interesting initiative. Definitely, you just saw your challenge. Yeah. But on the plus side, we got one user.
Let's do that. I look to Maike. If I get be invited next year, and in 2 years we do the same test, and I'm sure many hands will raise up.
So.
Okay, we take the bet.
Oh, there is a bet going on.
Okay. We discuss that.
So there is a bet. We're going to finalize it in writing after the show. So when we look more from the perspective of a startup, we just heard that one of the struggles for banks is they might not have as many technology-savvy people all the way up to the highest level. So Florian, why don't you give us a little glimpse from your perspective as a second-time founder? One would assume you have easy access to technological people and a different thinking. So what are maybe the differences and indeed the advantages of fintechs compared to the banks?
Okay, more or less that's exactly the setup I have used. I had the people and the technology, and the big advantage of fintechs, I think, is that we can focus on one topic of the entire banking life. So we can pick one piece out of it and make it really perfect from the usability point of view, and we can try out much more things in less time. So because we can speed up the process and we have access to banks, customers, and so on. So it's a different setup compared to I was working in a bank. So it's a different setup. A bank has to consider way more things in developing products. And with Fino and all the other fintechs, I can do one thing really good and right.
And you just mentioned that you can iterate a lot, so you can test different features, maybe even different services, which of course is a great thing. But at the same time, when it comes to my money being in a bank, I don't want to see everything change every day. That might give me a slightly negative feeling. So we also see some of the fintech startups, for instance, number 26, cooperating with Wirecard to do the actual banking, so they could say, we got a legit partner here. So how important is that initial trust building for a brand to be perceived by the consumers as trustworthy in the fintech space?
Trust is really important. In my case, trust is quite easy because we are partnering with banks. So I need to be trustful when I do a cooperation with a bank, and together we are trustful when it comes to the end customer. But nevertheless, when it comes to finance, trust is really important, and we have to make sure that number 26 and all the others, that we can show the customer why we are trustful. We try to go on the one hand with the bank, on the other hand we invite the TÜV, for example, to screen us to make sure that all our processes are quite good, and exactly the same when it comes to regulations. I prefer to have the same setup for fintechs as it is for banks, and I don't want to have any other rules. And under all these setups, I think a fintech can be as trustful as a bank.
Okay, so we've heard quite a bit about where we're coming from and where we are today. Next, I want to dive into where the future is going to take us. But I also want to mention to the audience that we're open to questions at any time. So if you have a question, just raise your arm. We're going to make sure to get you a microphone. So Christoph, maybe you can give us a glimpse of the future. How do you imagine yourself 10 years from now, sitting in one of those flying cars and you just realize, oh, I need to do banking now. How is it gonna work in 10 years? What's gonna be different?
So in 10 years, I don't really see flying cars around. There's gonna be a lot of change. I actually bet there will be autonomous cars and self-driving cars, which will be a pretty cool thing. From a banking side, I think, and I want to add on what is happening today, we hear all the complaints about regulation and margin shrinking and all this, but I think banks have two major problems which they don't talk about so much, and number one problem is culture. There's a problem with culture in banks where they get somehow disconnected from the real world, and that is in direct line with the user focus, where a customer is a customer and you got to be in the center of business. You got to solve a pain point for a customer, and for some reason banks have lost that over the last 10, 20 years. And here's where the future comes, and that's fintech. And fintech, if it's not bringing the solution or the great thing to the market, at least it's changing the tone of the industry, and it's opening up communication and it's creating transparency. And I think this will help us, and I think we'll have a finance world which is much more cooperative, which is much more inclusive, and which will allow people to really do what they want to do. That's, I believe, the future.
So of course, culture is always, in any industry, a topic when it comes to innovation or even disruptive change. And we're lucky to have Matthias here, who actually entered the banking world already quite a few years ago, before anyone even named the whole thing fintech. And you came up with a new way of banking. So how would you maybe compare some of the cultural walls that you might have run into back then to today? Do you see some change already over the past years in the thinking of banks?
I don't know. No provoking, but you're totally right. The culture point is the biggest one, and that came to my mind while listening to this kind of challenges. Well, yes, I see some changes, and the proof is that you see more and more bankers. For instance, this year, if you visited Money 2020 in Copenhagen, you see buses of bankers. And even Mr. Zielke from Blessing from Commerzbank was on stage in the Money 2020. I don't know, maybe that was a dinosaur exhibition, but hi Martin. But anyhow, that's you know, yes, banks start to deal with it on the one side. On the other side, actually, you know, dealing with it and using the buzzwords does not really mean you understand the core DNA of it. What is it about? Banks do have a lot of tech-savvy people, huge armies of developers, program managers, and so on. And I know a series of people, they try to be more innovative and they try hard to be, but they find it extremely hard to convince their decision-making environment actually to move into that, mainly because it's driven by risk management decisions, compliance decisions, whatsoever. Mainly it's driven because, and I totally underline what you said, because the decision makers are not living the lives of their customers. First of all, the culture is also being proved in a second sentence I heard most recently from a decision maker saying, why bothering me with topics that will happen 2 years after my contract is ending? You know, well, yeah, that's a look you can have as well. That is not sustainable at all. But there you can see it's very much a managerial view. It's not an entrepreneurial view. It's definitely not a customer-centric view. They only read about the customer. They do not know what the customer really is living like. So there are many, many more examples. I'm not sure if there is a real change going on. We will see. On our side, actually, we think, yes, regulation is needed. We are absolutely, the trust topic is a huge one. We do not think it's useful that money can put them, the people can put their money into deregulated companies, because at the end of the day, that will once one of those guys is falling down off the table, actually, that will harm us all. We will be we will have a damage on that as well. So this is why I'm very happy that people come up and say we want to be regulated. So we will have to have actually more people that can think in both parts of the brain. The one is the regulated part and the other one is the innovative one. That's a tough challenge.
So Martin, you already mentioned that there's got to be two things. One of them being open for change from within, but maybe also being open to partnerships from the outside world. So explicitly with FinTechs, potentially. Do you think that FinTechs are at a stage where banks can take them seriously and say, okay, let's enter into a cooperation? Or is it still a stage where that needs to be seen?
No, absolutely. And I mean, this is not black and white anyhow. So you have all types of maturity levels at FinTechs. Yeah. I believe there's just no other alternative. Yeah. I fully agree to your a little bit provocative thesis, Matthias, on the culture and yours, of course. And that is the strongest, and culture has to do with leadership and leadership styles. Banks are, people are used to live in control environments, diligence, discipline, intelligence. But that's limited to this. And I mean, you know the saying, if you build fences on people, you get sheeps. And that's how people are used to behave. And then the crisis has added to it. But on the other hand, that's not black and white. Yes, there's regulation, but you always have room of maneuver. You always can make different decisions, fight for it, but you need a vision. You need to know where you want to go to. And that's where you come back to your FinTech question. They challenge us, banks. And the good thing is, I believe banks more and more take it serious. There is starting to be a sense of urgency. We don't know yet how we really do it. So we really are struggling on how to approach it, two-speed architecture and technology, cooperations with FinTechs, also cooperations within banks or with tech companies. We understand that we have to be more open. But on the other hand, I wouldn't be too pessimistic. We still have the large customer base. We know how to scale technology. We know how to run regulation. And we still have the trust of customers. Customers want to do mobile banking with their banks before they want to do it with someone else. But how to get there, that still is a big way to go.
Maybe if I may,
of course,
we can do it a little bit more interactive also, couldn't we? So, yeah, I think there are a lot of the huge banks are moving now really strongly, and even outside of Germany. I have to say, listen, mirroring back actually my international and outside Germany contacts and all the discussions we have outside Germany, let me really share that Germany, to me, is in this sense the kind of rote Laterne in this whole development. You know, not only within banking, but as a total society, we have a huge issue with digitalization, and we as a nation and the national decision makers like our politicians and so on, my most favorite topic on that, by the way, are really more or less always asking, why should we do this? Is this really something we should bother with, and so on. This is totally different, and let me give you one example out of Singapore, which is also in automotive and kind of self-driving cars. Definitely will be the first city on the planet actually accepting that. The regulators there want innovation. They want innovative companies to be on ground. They want that you deal with blockchain. The regulator wants you to deal with blockchain. Can you imagine in a European environment? They want you to deal with innovative methods of payment and any kind of innovation coming out of the fintech. And why do they want it? Because they know that they have to overcome the current status. And they're preparing the country on this, you know? So that's a totally different setup. And I hope that whenever I have contact to German regulators, I make a lot of advertising on this. And the German regulators are very open for that as well. And they would, believe me, they would love to have banks around them saying, we do more on innovation, in particular customer-centric innovation. The regulator wants to see that. Regulation is only an excuse for a lot of banks, but they never spoke to the regulators about that.
And of course, one of the ways how your company, Fidor Bank, has been able to innovate just briefly ago is with Telefonica, right? So can you maybe tell us a little bit, and just as a quick intro, those of you who haven't heard it, if you have an O2 contract, you can essentially use that for banking as well. So there is a bank account set up which is with Fidor Bank, but the user interface is through O2 and through the contract with them, and then any interest you would receive is in data and not in money. So that is definitely a new product in the market. Actually, you're a first mover with that. So how did that go? Did you have to run down a lot of walls at Telefonica? Were they very open? And did you have any regulatory issues that you had to solve?
So first of all, let me thank the team of GFT for making that happen with us. Yeah. So I think that is really, and that really comes from the bottom of my heart, believe me. So first of all. Second, so there you can see it's a team approach already, because little Fidor cannot do all of that on its own, totally impossible. Regulation was not a topic at all in this, because Fidor Bank shields that with its banking license. So we as the bank need to make sure anyhow that everything is compliant according to the rules and so on. So our face is in the window to the regulators for that in any meaning. It was not, let me say, it was kind of a long-term conversation we've ongoingly had with Telefonica, but at a certain point Telefonica said, now let's go. Okay, so this is from that point on. Technically, I would say it took us 4 to 6 months to implement it. What is it? At the end of the day, it's an user experience on top of our banking stack, which is Fidor operating system, accessed via APIs. Sounds pretty easy, but at least it took not that long to set up a full banking experience for the customer, mobile only. And yes, as you mentioned, we had some ideas, and some are still to come, what could be rule breaking, because rule breaking personally for me is always very important. And it makes no sense to come up with a Me Too project or product. So in the rule breaking thing was really that we said, instead of paying interest rate in a 0% interest rate environment, instead of paying interest rate in euros, why not paying interest rate in data? Because we understand anything that is digital to be a currency. I think this is talk to your local compliance about that. And data is a currency. If you talk to my kids, data is a straightaway currency. And I did do the family test at home. I explained it to my mom. She was less excited about it. But hi, Mom. But my kids, my daughter, aged 15, so in the sweet spot, so age 15, I said, listen, do you understand if I tell you get 1 gigabyte per month for using this account? And she said, yeah, cool. Can I have it? said, damn, it's not for minors, so you need to be 18. Ah, daddy. No, so that was pretty easy actually to get, and that was the test at home if you can understand it. And we think that makes banking interesting again. So we have to cross the border. We have to get out of our closet, actually, in a certain sense, in order to open the door and create what we call mash-up industries, combining the best out of several industries to make it a compelling offer to the customer. And I think this is what we see in automotive industries, this is what we see in any kind of industry. Why on earth does the bank world think this will not happen there?
And that's a great example of innovation that you just described to us there. And Marika, you were involved in that project from an IT point of view. So do you think, or what could you say to people from other banks who might be listening? What is one of the possible steps that they can take to innovate? How can they go about it?
Well, very important in that cooperation was that actually Fidor is technology, they have a technology mindset. So it clicked quite well with our people. I mean, we're a tech company as well, so we understand technology. And as we work for banks, we understand the banking industry. We ourselves would have never talked to O2 because it's a telephone company. But we want to work for the financial service business. So when we cooperate in the project, and I remember one thing I heard during the whole project, because for sure it's always about, can we get that live on all the different systems, you know, Android, iOS, etc. And it became clear we rather take an agile approach and try to get something out as fast as possible instead of going for the, oh, we have a contract, here's the entry criteria for the UET, and by the way, here's the acceptance criteria, and by the way, before we haven't double-checked, you know, we cannot go live. It was much more a joint, and I remember I asked the team, do we go live? Yeah, maybe next week. I said, what do you mean maybe next week? I mean, and they said, yeah, maybe we don't know yet. I said, what's the client saying? Fidor said, yeah, they understand that. I said, oh, they understand that. Okay, good. Hopefully they understand that. And that little detail, yes, they understood it. And the biggest problem we have as a technology company working for banks is to explain that. Because banks usually go with business case, rules, processes, and you have more people who watch a project and govern a project than people who do the project. And that is very different when you work either for a fintech, and I would say Fidor is quite a bank fintech, combining both. That's a big difference. So yes, you can call it a cultural change. I would rather call it a mindset. And having a technology mindset for the finance industry is different than thinking I'm a bank and I want to use technology, and by the way, it's a cost. And let's drive the cost down.
So there was a look across to you, Martin.
I only can agree in this case. At the end, we also have to make money. So I think we shouldn't forget about business models. And at the end of the day, it's all nice. Technology is not a means in itself. At the end, fulfilling customer needs brings finally also some money to the table. So I hope that good luck for your venture with.
We will grow quicker than your pay something, you know.
Well, I'm not sure about this one, but
no, just joking. Just
no, we talk about it next year.
Yeah, sure, happy.
If you bring your numbers, some transparency, then we.
I have to ask Telefonica to do so.
Okay, so you see. No, but to your point, absolutely agreed. And I want just to mention one point to what you said also, Matthias. Contextual banking. There are different words around in the debate, but I think contextual banking is the right thing. It's a holistic customer solution with financial services and a wider range of digital offers. And of course, a bank can't offer this on itself. So you need partners by definition. So I think that's the ecosystem thing where we're evolving to. So how this ends up, and who is the one who drives it, whether banks can sit in the middle, to what extent we are able to keep the primary customer relationship, we will see. That also will vary. We are very much focused on consumer banking. Wholesale banking is different in their dynamics. They are very similar pattern, but it's a different clientele. It's a different integration with the customer also to some extent. Financial markets and specialist areas like real estate finance also. There we will see differing developments.
I think banks will, out of my perspective, banks will sit in the middle because banks are situated ideally for that, given by our regulatory status. We have to take care of the customer identity. You know, as you know, perfectly know, we have to take care of the customer identity. We are audited on checking on the customer identity, which means KYC. So if there's one currency I foresee to be crucial in the upcoming digital environment, it's identity. You know, and we are a audited and regulated identity control engine. That's what a bank is. That is not creating a USP, but that is creating a strong trust situation which we can leverage on, actually, in a very responsible way. And I think we did not even start thinking about what that means, actually. So maybe that's, you know, the combination of data and bank, you know, like data bank and ultimate trust, accessibility of this data, which is controlled by the bank. Because we do not only do the KYC, we are forced to redo it on a yearly level. And all that, yeah, by the transactions, by sending out even letters one time a year to make sure that the people are still living there where they are living and calling up if the letter is coming back and so on. So I think once we realize in the banking world that we have a very strong center kind of quarterback position for the identity topics, I think we begin to understand, first of all, then the game really is changing, and then we understand suddenly that new business models are emerging. I think we have to, by the way, not only because of ECB and the 0% interest rate environment, we have to rethink our business models anyhow. We are forced on that. Yesterday's US decision on interest rate, you know, leaves me very pessimistic for the future, by the way. So means the crisis is not over, so we have to rethink it anyhow.
It's pretty much like the Netflix Warner Brothers story. I mean, when Netflix started, they were saying like there's only two options: Warner Brothers becomes Netflix, or we become Warner Brothers. Yeah. And I think when the banks are fast enough, they become FinTechs, or FinTechs will become banks.
And then you look, for example, at number 26, who have been granted a full bank license in July. So that just as one example from the area. They're 1.5 years old, so they must have done some things right. And that incumbent position that you just played on, saying we are the identity holders, we have the regulations, but then all of a sudden, out of nowhere, someone like this pops up. In 1.5 years, that's, I mean, you can probably attest to that. That is like not even a full cycle of strategic decisions and implementation. So where does that leave the banks? Shouldn't some of us be a little bit more scared up here?
Well, just let me, before Matthias, because it's already starting, just two side remarks. It comes with a cost. So don't fool ourselves. This client numbers, and I guess the colleagues will agree, cost per client, this doesn't come for nothing. So obviously, we heard there are a couple of wealthy people around who put money into it. So there is money, but it comes at a cost. First point. Second point is, client numbers is nice. Again, at the end of the day is how do you monetize it? I would be interested to understand from the presumably 200, now I heard 250, sometimes 160,000 clients, how many clients are active clients, how many clients use that as a primary banking relationship and transact on their account. I guess the numbers will be a bit more moderate. I know many people who have a number 26 credit card, that's what it started with, but they have it with 7 others. So that by itself is not yet the objective. However, you're right, this goes much faster than we've seen it in the past, so we can't just wait as banks. Let's let them grow a little bit, then it will be too late.
I think you're right, but in terms of that, the FinTechs, and that's one part of they do not have to earn money, and the bank has. That for sure limits, but don't underestimate that the banks who are picking it up and do it fast, they win against the other banks. So I'm not sure the FinTechs are the real enemy or disruption. They probably create a disruption, but the banks who take it, who accept it, who can deal with, who change themselves into a technology company, and the banks who don't, then you have a problem. Because competing against a fintech, yeah, you only provide a certain service, only for a limited amount of clients. That's not a real, let's say, a real problem for your business. But if a real bank does it, it is. It becomes, and I think that will be the game for the next years.
I would add, if a non-bank comes.
Verse.
I fully agree. I'm not afraid that fintechs will not kill banks. Fintechs will help banks transform. There will be some who are more in the B2C space. There are some challenger banks. But over and above, I'm not afraid of fintechs as a threat. It's rather an opportunity. But there are others, banks, but also non-banks, the big platform providers. And you just have to look to China with Alipay and Alibaba. PayPal is coming out of the eBay story. So there are very big players who have very deep pockets, who can invest a lot of money, much more than banks can today invest, much less regulated yet. Here I agree with Matthias that at the end of the day, regulation is a problem, but it's also an opportunity for banks very, very strongly. But I'm more afraid of these players than I'm afraid of fintechs.
One comment to fintechs don't have to earn money. I totally don't agree to that, but nevertheless, in this discussion, I like the discussion about the ecosystem. So the question is, does a bank has to provide all services, starting from know your customer? That's a big chance if they are fast enough. But nevertheless, I believe that customers will choose different services from different players. So that not a bank has to fulfill the whole product portfolio for a customer. That will change. And then we have a new level above the bank, that the customer can choose a front end, can choose, and no gatekeeper like a bank will decide what a customer can use. We will see the new entry level. I think Fido is going in the direction sometimes with some services that you provide more service than banking. You aggregate it, and we will see new aggregators and new service layers which will provide banking service from the one bank and the other bank and fintechs and totally different services. So the gatekeepers, I believe, will lose a game, and we will see new services.
I have to jump on that. When you've been 10 years old, I never thought I'd start a sentence like that. You know, young man, when you've been 10 years old, back in 1995, yeah, rough, no, when have you?
Little over 20.
Okay, 20. So we started in 1994, we started Direktanlagebank, which is the AB bank, funnily also being acquired by a French bank this year. And that was a discount brokerage bank. And we had exactly the same theory. And we said we will have customers that will pick their best solutions out of each segment and will manage it on their own. Today, now 20 years later, I disagree. I have to say, if we want to really achieve, it depends on to whom you talk, by the way. If we want to achieve mass market share, it's not working. We have to simplify it. We have to Facebook it, like we have to AOL it more or less, you know, instead of delivering the full freedom and flexibility of the web. People don't get it. And I think this is, it's depending on your strategy. If you want to be an expert, you can be in the niche, and you should be. But if you want to service mass market retail, you have to aggregate and make it as simple as possible. Your service is a perfect part to this, you know, because changing the account, I think, is a very important function. Yeah.
Okay, so
we want to kill the discussion, you know.
No, we're also nearing the end, and we've heard a lot of different views, which I really appreciate. And maybe just to leave on a pointed final statement, I would really like to hear from each of you who you think is going to dominate the financial market or the banking market more specifically 25 years from now. So, Florian, why don't we start with you?
Okay, it has to fit to my last statement. I think it will be an aggregator, but it's neutral. So I believe the customer by himself chooses in the aggregator level. Okay. So it's not the fintech or the bank. It's the combination.
It's the aggregator.
I hope the customer dominates it.
I think technology companies will dominate.
Ooh. So we're getting a lot of different views here.
I could say, of course, the banks will still be in the middle. I'm convinced. However, 25 years is so far from now. Honestly, I have no clue. I have no clue. I would even, and you had the same question, within 10 years. I believe into this contextual banking, this ecosystem, but who runs it? I have no clue, to be honest.
I just hope that for credit we are still around. the rest, I mean, we only look for 12 months. That's really, there's so much change, so much disruption, and strongly change is exponential. So we can't see that far.
Great. And on that note, we're going to end. And I think you guys still need to finalize a bet so that we see you back here in 2 years and measure how successful or unsuccessful
You have to invite us,
been.
so we can.
I think we can take
check
care
it.
of that. Thank you so much for joining me up on stage. And thank you, everyone, for being here in this session. I'm going to hand it back to Sarah. Thanks.